Welcome. In this video, will ZBCN coin increase by 200%? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When looking at the chart from a broader perspective and on the weekly time frame, we are faced with a notable candlestick formation. The current weekly candle structure formed by the price movements resembles a pattern commonly referred to in technical analysis as a bearish engulfing. If the candle closes in line with this structure, as seen in similar past examples, it could signal a short-term correction or a temporary pullback in the market. However, this scenario not only brings up the possibility of a decline, but also offers investors a valuable observation opportunity. Such pullbacks can often represent healthy corrections necessary for the continuation of an uptrend. Candlestick formations that appear on broader time frames like the weekly chart are especially valuable for providing insight into long-term direction. If the weekly close confirms this pattern, a short-term sense of caution may arise in the market. However, it's important to view such developments not only from a negative angle, but also as containing potential opportunities. Historically, strong rallies are often preceded by these types of correction moves, and these corrections form the base for subsequent upward momentum. The formation of this pattern could suggest that short-term profit-taking or position reductions may occur among investors. Technically, though, this should not be viewed as a sign of weakness in the market. Rather, it can be interpreted as a breather the market needs to attract new buyers. Especially after strong upward moves, a slight cooling off period can provide favorable price levels for new investors and allow current holders to reposition more safely. The fact that the weekly candle has not yet closed shows that nothing is finalized for investors at this point. So, the pattern remains a possibility rather than a completed signal. This suggests that the market has not yet firmly decided on its direction, and that a last-minute wave of buying could change the entire outlook. In such situations, it is generally recommended that investors follow developments closely and respond with strategic moves rather than panic. There have been many cases in the past where similar weekly patterns were invalidated at the last moment with green candles, even closing the week with strong buy signals. The forming pattern currently serves as both a reminder to remain cautious and an environment that investors seeking opportunity should assess. In technical analysis, these types of candlesticks can sometimes be misleading in the short term, because although temporary declines may occur due to emotional movements in the market, these pullbacks remain mere corrections as long as the overall trend direction remains intact. In fact, these corrections may serve as confirmation that the trend remains strong and continues in a healthier manner. The appearance of such a candle on the weekly time frame can also provide clues about the actions of large players, institutional investors, or high-volume buyers in the market. If there were truly dominant selling pressure, the price would likely have dropped more sharply. However, the current structure shows that the price is still holding above certain support levels and that no strong panic selling has occurred. This indicates that confidence still exists in the market and that the possibility of a recovery remains on the table. In this context, waiting for the completion of the weekly candle would be the healthiest approach. Sometimes formations close in entirely different ways at the last moment, completely reversing the technical analysis. Especially strong news flow toward the end of the week, global market influences, or sudden buying pressure can invalidate such patterns. Therefore, in technical analysis, it is always wise to act based on confirmed signals, but we can't decide based on the candle alone. Let's also take a look at the other metrics. Stay tuned. When looking at the chart from a broader perspective, it is clearly evident that a highly notable and powerful technical formation known as the cup formation is currently developing. In technical analysis, this formation is considered one of the most important structures signaling long-term reversals and renewed upward trends, reflecting a gradual and strengthening shift in market psychology from bottom to top. The current price action of the asset under review indicates that it is steadily progressing toward the completion phase of this cup formation, showing intent to reach the upper boundary of this massive structure, its target point. Cup formations typically occur after long periods of accumulation. During this phase, prices either move sideways or gradually decline, forming the bottom region. This is followed by a slow and steady recovery upward from the bottom, eventually creating a large, rounded base on the chart. The current chart in front of us perfectly reflects this healthy and strong structure, showing that the right side of the cup is being filled by an upward move and that investors are gaining increasing confidence. The noticeable increase in volume on the right side of the formation especially suggests that this upward movement is not merely a short-term move, but one supported by institutional or large-scale investors. With this volume support, the journey of the price toward the upper resistance level, the peak of the cup formation, appears highly likely to continue strongly. Once this resistance level is broken to the upside, the technical target of the formation will become active, and from that point on, the price may be expected to reach much higher levels. According to the measurements made, the technical target of the cup formation is positioned approximately 200% above the current price level. This means that if the price manages to complete this formation in a stable manner without breaking the structure and continues its climb toward the target area, there could be a substantial increase in value for investors. These types of formations are closely followed not only by technical analysts, but also by medium and long-term investors, as they often represent the early stages of major bull runs. The wave-like, step-by-step upward movement in the completion process of the cup formation indicates that market confidence is beginning to grow and that investors are showing increased interest in the asset. As this interest rises, both trading volume visibly increases and the fear of missing out, FOMO, begins to kick in, creating conditions for the price to move upward more rapidly. Such a psychological threshold might be occurring right now, as the right side of the formation is nearly complete and the target is coming closer each day. Moreover, the absence of any signs of overbought conditions or speculative bubbles during the formation of this cup structure suggests that the rise is based on a healthy foundation and that prices are being supported by underlying fundamentals. This leads investors to believe that the continuation of the formation without disruption is highly probable and that reaching the target is merely a matter of time. On its path to completing this cup formation, the price is also supported by several technical support levels. This means that even if minor pullbacks occur during the upward movement, these levels will act as strong support and help push the price higher. Especially with these support levels in place, the price reaching the neckline, considered the most critical threshold of the formation, indicates that the key resistance has been tested. If the price breaks through this neckline, or resistance level, with strong volume, then the formation will be technically complete and the upward target will be activated. The price action, which reached the upper boundary of the Bollinger Band on the chart, has now evolved into a remarkable structure. Bollinger Bands consist of three lines that dynamically expand and contract according to market volatility: the lower band, the middle band, and the upper band. These bands represent the usual boundaries of the price and help us understand the overbought or oversold areas of the market. In the current case, the price has been on an upward trend for a long time, reaching the Bollinger Upper Band. This should be considered as a positive sign that the market is strengthening and the momentum is intensifying in the direction of buying. In particular, the fact that the price has touched or crossed the upper line of the Bollinger Band is often interpreted in technical analysis as a signal that the uptrend will continue. However, as seen on the current chart, the price may have briefly dipped slightly below the upper band. Such temporary easing does not indicate that the pattern or momentum has broken down, but rather that healthy corrections have been made and the price is preparing to move upwards on a stronger footing. Bollinger Band should be looked at occasionally. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.